Monday, December 30th, 2019, Maneco 64, home of alternative economics and contrarian views. So we have a day and a half basically of trading left in 2019. I would say the market will get back to being active and normal probably next week. Yes, New Year's Day is on Wednesday, but I only expect most market participants to be at their desks from next week. Of course, nowadays there is such a thing as algorithms, computer trading. So yeah, it probably will be busier than it used to be in the past, just after New Year. So this morning, of course, I'm going to look at where the market is, and then I want to talk about how commodities, not just precious metals, but crude oil, copper, indicators like the HUI index and the CBR index, which tracks commodities, are starting to show signs of life, and that they're all starting to move in the same direction. Some of these indicators have lagged gold and silver, for example. The HUI is starting to move now, even though gold started making a move earlier this year towards the end of May. We're seeing crude oil and copper break out of key technical formations that I think are important, and I'll show you these charts as well. So before that, let's look at where the markets are. It's 8:02 a.m. London time. So here we are. We've got spot gold at $15.1350. We're up about $2.50. The high has been $15.16 and the low has been $15.1070. Silver has picked up a little bit. We're still below 18, but it's up 14 cents or 0.75%. The high's been 17.97, the low 17.73. Right now we're at 17.89. The Dow futures up 6.5 points, virtually unchanged, 28,656. S&P is up 1.5. S&P future at 32.41. Nasdaq 100 future is up 10 at 87.78. Currencies are continuing to trade higher versus the dollar, especially the pound and the euro. Last Friday we saw a fairly big move by those two. They're up about 0.75%, which was unusual. I thought there wasn't really any news. But this morning, the pound is up 0.2% at 131.14. The euro is almost up to 112. It's also up 0.2 versus the dollar. Dollar is also weakening this morning versus the Japanese yen. It's down 0.25% at 109.15. Dollar's down 0.2 versus the Chinese yuan, below 7 now. It's at 6.98. And I'll come to the commodities later and the dollar. I won't talk about the relationship right now. Crude oil, WTI, is unchanged, still at fairly elevated levels, 61.66. Brent is almost at 67 here. Oil is unchanged, but we're right near the recent highs. Not quite near the highs of the year, but pretty close. Bond market, 10-year, still fairly well controlled, the 10-year yield. We're up 1 basis point this morning at 188. So they've managed to keep it below 2%. Don't forget, the lower yields go, the higher bond prices go. Inverse relationship. So now let's look at the commodity market and precious metals, and why I think they're starting to all move together. Really, if you want to see a strong bull market in precious metals and commodity markets, they need to be moving together. When gold and silver started moving end of May this year, commodities were still quite subdued, like the other commodities. Of course, precious metals are commodities. Gold especially is a monetary commodity. Silver is a bit of both, industrial and monetary, I would say. So am I saying that we're going to have a decade? Only because in a few days' time we're going to start a next decade, a decade of higher prices in commodities? Not necessarily, but usually the way a decade starts in terms of asset prices could be an indication where things are going. Of course, there's still a lot of mainstream commentators that see inflation being a problem, low inflation being a problem. Of course, these people look at inflation through the doctored government statistics like CPI, and you can bet if commodities start moving up a lot, they're going to use the core numbers, which exclude food and energy, in order to keep. And why do they want to keep this charade that inflation is low, even though the central banks are creating trillions upon trillions of new money and credit? Well, because they need to keep interest rates low to keep this paper bubble going, to keep their jobs, to keep their view of things going. The fiat currency system, the speculative derivatives market on Wall Street, City of London, it's all part of this paradigm that the problem is low inflation. Of course, they haven't looked back in history how during the 19th century in the UK, the price level virtually was unchanged, and we had a huge industrial revolution. The middle class grew with no inflation, with the UK government actually paying down debt from the Napoleonic Wars. And now we're told that inflation at zero or prices not rising is a bad thing. Well, it's a bad thing for their bubble. That's why. So let's look at the few interesting charts here. First one is the CRB index. I've only got a 5-year chart here, but as you can see, we're starting to move higher here. It started to move sometime in August. You can see that in August we made a low, almost a 3-year low, even though gold had started moving up. So it wasn't like following gold, but now after a delay, CRB is starting to move, and we are at 187 right now. I would say the high from April at around 188 needs to be broken, but it's looking better. CRB, of course, is an index of all the major commodities, precious metals, energy, the soft commodities. So there's still a lot of potential on the upside. So now let's look at the HUY, which is an index of the major gold miners. It's called Gold Bugs Index, HUY. That as well, that started to move as well together with gold, but it's still lagging gold. Gold broke the high of July 2016 at 1375. We're now above 1500, but as you can see, the HUY it still hasn't gone, hasn't reached the high it made in August of 2016. It still has a ways to go. It's undervalued compared to gold, but as you can see here, it looks quite good technically. We've broken out of the high from the end of August here, yeah, so that's also confirming precious metals move. The CRB is also confirming a general commodity move. So now I wanted to look at oil, which is a big part of the CRB. And I've shown you this chart before. Some of you may not have seen it. Some of you may be new subscribers and viewers. But as you can see here, we're not in the at the high of the year. Crude oil did get up to around 66 in April this year, but as you can see, we're breaking out of this triangle, and it's looking quite positive, the price for WTI. It says here US crude, that's WTI. And now let's have a look at copper. So copper also, same kind of, it's like a falling wedge, and we've got also a trend line here from a very long-term trend line from about 2002. So there's not much downside in my opinion in copper. There's a lot more upside, and we're breaking out of that falling wedge in high-grade copper. So that's confirming precious metals, commodities, energy as well. Of course, the mainstream economists are also going to say that this is a sign that the economy is picking up. I personally think, as I was talking about the dollar earlier, that the dollar is starting to move lower in the last few days. Of course, it could be just a short-term move, a bit of noise, but it could be indicating that the dollar could weaken because as the dollar is still the major reserve currency in the world, and all these commodities are still traded in dollars. I know there is the new oil contract in Shanghai, but the dollar is still the most important denominator for commodities. What that means is that if commodities are going up, it means that the dollar is going down. So this is what it could be telling us. And it also corresponds to my research in the dollar index cycles, and the fact that I think the dollar index topped in January of 2017 at 103.82, and that we're going to have 7 to 9 years of a bear market in the dollar index. So yeah, things are pointing to a weaker dollar, higher commodities. Of course, the central bankers, Wall Street, City of London, they're going to try to keep this, how can I say, this theme of low inflation being a problem, which we all know in the real world is not true. Yesterday, I was talking to a friend of mine at the golf club, and he said, we're thinking of changing cars. And the car he was talking about, I remember the price of the car back about 20 years ago was half the price of what it is now. Yeah, they'll tell you there's a lot of improvements. Yeah, there might be hedonic improvements in the car, but wages have not doubled in the last 20 years. So yeah, you might have improvements, but if people can't afford it, what's the point? And before I go today, I'd like to thank all the viewers, all the subscribers, all the new subscribers for their interest in the channel, for their donations to the channel as well, through PayPal, Patreon, through their purchases also in the Teespring store. Just to let you know, there's a 20% discount until tomorrow in the Teespring store if you use the promo code Xmas 2019 or Christmas 2019. You get 20% off everything in that store. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Please share this video far and wide as well. It helps. And you can also follow me on Twitter, BitChute, Steemit, and on DTube. I wish you all a great rest of the year, even though there's not much left of it, and a happy and prosperous new year. Take care. Bye.